All right, good morning, everybody. Same old. Rinse and repeat. It's exactly like yesterday. We got a lot of econ and we got Fed speakers green around the world. Japan and Hong Kong flat alongside the small caps. S&P is up 0.25%. NASDAQ is up just slightly more than that. And the Dow Jones is up the most at 0.5%, which is our benchmark. $8:30 today is going to be the biggest one, but there's still Fed speakers throughout the day, so we got to kind of keep our eye on that. All the biggest econ is done by 10 a.m. using FX Street, looking at the impact potential. We can see they're really just the early morning stuff until late tonight, when we're going to have more data coming out of Japan, just like we had data last night coming out of Japan. It's pretty important. We got Christine Lagarde again today. And then later in the morning, a lot of European central bank speakers as well. Keep your eye on any news coming out today on that OPEC Plus. I've seen a couple of analysts looking to short oil. It's getting near a key level. So basically the discussion is this wick back here around that $80 mark. It's about the 50%, the half back on this last big level down, that leg down. So that's a sell zone. First resistance is right around that 79, and the second one is through 81. Consider that whole zone a big sell zone. Of course, if we do manage to get through it with this inverse head and shoulders, then we've got, 84 and 86. But we really want to focus on, what we have, not what we think we can get. And what we have right now is a history of defense through this upper zone, and until proven otherwise, we've got to assume that those sellers are still there. When we put it on a weekly, it makes a little bit more sense. This is a fantastic weekly TRB setup. Remember, TRB gives us an output candle like that. That's the reason that we want to focus on them. Oil to 92. Well, that would shake things up. That's not the consensus at the moment, though. $8:30, 9:45, 10, 10:30, 11, 11:30, 3 o'clock. So full house. These additional auctions at 11 and 11:30, they're all right up in the front. You can use the IRX to kind of consolidate those. You can see we're still negotiating with that volatility trigger. Zero gamma is now below us. Same with the put wall, continues to stay below us. Call wall was rolled up 4609. And right now we're just getting into our daily pivot. We didn't really have too much of a move through the kill zone, but it was cleaned out right after 4 o'clock. Just reset itself really nice. That kill zone is fantastic. Starts at 2, ends at 4. Statistically speaking, the biggest moves in the market on a 2-hour time frame happen between 2 and 4. Bigger than the open, bigger than the close, bigger at any other time in the day. Statistically, consistently, over and over and over again, your biggest moves are going to be right there. I'm not the one that nicknamed it the kill zone. I just I like it. It's easy to remember, so I keep it. Volumes are within normal range, and there's no hedging this morning. So as big as this news feels, they're not scared about it, or they're not too worried about it. We'd see more hedging. We did make contact with the weekly pivot point. Consider that like going back to the center of the basketball court. If you're on one side of the court, then you only have one direction to go, right? And you've got a long distance that you could move. But when you're in the center of the court, you can really start fresh and move in either direction. So it's a simple way to think about things, but newer traders struggle with these concepts. So keeping them simple like that and using that basic analogy of a basketball court really just kind of clarifies things. That little bit of selling that we had yesterday was not bearish in the grand scheme of things. This is a weekly chart that we're looking at on the right side. If we look at last week's range, we came down and we tagged the 50% mark, kind of overshot it just a little bit. And that's it. Just testing the 50% mark. If we think about how we got here, bullish bar with a bullish close, bullish close, bullish close, week after week after week, minimal amount of wick underneath. Getting a 50% test shows that this move is slowing down. It does not say we're bearish. We haven't even gotten into the proximal line yet. So yeah, we sold off a little bit from the highs, and yeah, we faded down on the day to test that 45.50, which is a major level anyways. But that major level held, and that's the main takeaway to keep in focus. The weekly pivot point held, that 50% mark held, and we're still bullish. Right now, our current price is higher than Friday's close. And that's just bullish. We are back inside the previous week, though, so that sets us up for an inside week breakout again. We had already broke out once, and now we've got to do it again. But persistence beats resistance, right? It's kind of the concept that when price tests a high, like resistance, as long as it continues to make equal highs, it'll continue to go until that level is wiped out, and then we'll just keep rising above it. The more times we test a level, it doesn't get stronger. I've heard that concept before, usually in support. When we come down and test support, then we test it again. I've heard analysts say, oh, well, the more times you test that level, the stronger it is. Maybe in some circumstances, but think about liquidity. If there's, just just randomly pick a number, 1 million contracts sitting down there to be bought. And every time we come down and tag that, we absorb 250,000. Well, after 4 bounces, we've collected the million that's there. There's nothing left. And we're going to cut through it the next time because there's no more buyers there. Same thing for resistance. We are getting a little extended from the VWAP this morning. So just like yesterday, looking for a little bit of mean reversion. Just have to keep in mind we do have economic events on the table. And we've got conflicting Fed speakers, something that Bloomberg was talking about this morning too. The 2 big Fed speakers yesterday were kind of talking past each other. Of course, you know, that it wasn't like they interviewed both of them at the same time. Just both of those speakers next year are going to be voting members in FOMC events, and each one of them had a different perspective of where we are now and where we need to be going forward. So maybe today we get a little bit more clarity out of the rest of these Fed speakers. But, you know, it's a little bit of a game too. I've seen this before. They get one speaker to admit something, or, you know, one Fed official to admit something, usually grudgingly, you know, like, you think we need to raise? And of course they'll say, no, I think we're good. We just stay here. But it's possible you could vote for a rate hike. Yes, but, and they'll just cut them off there. Oh, okay. So you're in favor of a rate hike. And then they go to the next Fed president and say, hey, Bobby over there says he's favorable for a rate hike. Are you favorable for a rate hike? And one by one, they'll knock them over like dominoes, getting all of them to admit that they're willing to raise rates if, but they don't let the if come into the headline. It's just, well, Bobby and Joe both said they're willing to raise rates. Games that the media plays, right? All right, we do have the narrower range that we spoke about yesterday. Because of that push right before the open, instead of it being 80 points now, it's 90 points, but it's still a very narrow range. And we do have the classic B shape now. All right. Well, that's a very nasty looking B. There we go. Both the TPO point of control and the volume profile point of control are lined up. We do have a shallow area below that 45.50. If we cut through that, we'll end up in the 45.25 range. So playing quarters on the ES, it's a little odd, but we'll take it. And we have a new VPOC. It's been a little while since we were actually able to have one of those. $45.75. Some interesting price action this morning. Either way, we're on the mend. That move yesterday was not bearish. Just keep that in mind. And focus on the data points of today more than anything else. This is the 10-week that we're looking at here, 2.85% above the 10-week. We are on the decline back towards it. The thing is, price doesn't have to go down to the 10-week. The 10-week can rise up to us if we just hold put. So we don't really need to go anywhere. We just need to hold the line. Less than 3% from the 10-week is not overbought. We're only slightly more than 0.5% above the 10-day. That is definitely not overbought. This has been a really nice, gentle decline back. We don't always get something so clean looking. This is a wave of some sorts. It kind of builds on the analogy of being back to the center of the basketball court. We're getting really close to zero here. It doesn't have to get to zero before it's considered reset, though, and we get a new sweep. Either way, when we're looking at this, trying to gauge, have we moved too far, too fast? No, we're not overbought. We're not oversold. We're not extended. Least squared methods, mean reversion, dot plot statistics. Everything says that we're just sitting in the center of the court. The longer we sit here, by the way, the more energy we build up. If you were to apply something like the RSI Laguerre, you could gauge that energy. And funny enough, reversing very quickly, like we did yesterday at 10 o'clock, that doesn't spend energy, it builds energy. The analogy for this that I like to use is throwing a ball. So you go out in the yard, you're playing with your kids, you throw a ball. Your energy is what moved that ball. And as it's flying through the air, it loses energy. Take a ball to the top of a tall building and drop it. As it moves through the air, it's gaining energy. So one thing we learned by using the RSI Laguerre is how a market gets energy. It used to be believed that sitting in a tight range is how a market regained or built energy. Chopping about, building basing patterns, topping patterns, and that's not wrong. That's just not the whole story. A quick reversal, and that does mean quick moves up. If we've been traveling to the downside consistently, if we're trending down, and the quick reversal would be up. But if we've been traveling up, then the quick reversal would be down. Quick reversals are a way that a market can gain energy really fast. So when markets make a move like that, you can apply the RSI Laguerre and be able to answer that question. Was this move done with energy behind it, or was this move done to gain energy? It's a pretty cool way to answer that question, by the way. So the 10-year is up this morning about 0.5%. We're riding above VWAP. We're still sitting inside of yesterday's range, and really not even towards the upper end of that range. We're above the 50 mark. That's a good start, I guess. And we're above 50. So we're not bearish in the 10-year. We're just certainly not very bullish. Take a look at the dollar, on the other hand, and that's a very beautiful bullish chart. Thinkorswim's a little laggy today. We're working our way back towards the weekly pivot point. We've already cut through the ADR half. We don't have a market maker move, but that's been an exaggerated move. Looks pretty good. This was starting to gain notoriety for how many weeks in a row it stayed green. But now it's worth noting that we're trying to get back above that 50% mark. We got a half back break. The thing is, a half back break like this, it could have just wicked down. And for all we know at this point, it's going to rally back out again. So 103.50 is a pretty significant level. We need to see if we're going to actually hold this breakthrough and continue to the downside. Notice we're underneath all of these moving averages. Sure, we still have the 200 underneath us, and that's the 200 week. But we are underneath the 50 week, the 20 week, the 10 week, and we're through the half back. So 103.50, we want to see that hold. It's no longer a teeter-totter, right? When the Dixie goes up, we don't believe that the S&P and the NASDAQ is immediately going to go down. And vice versa, if the dollar goes down, we don't expect the indexes to immediately rise. But a lower dollar takes weight off the indexes. And all else being fair, if nothing else is holding them back, then they can go up. And at least if they don't, we can say they're not rising, but it isn't because of the dollar or the dollar index. What we don't want, however, is to see fantastic moves like this, up or down. This is just bad for the market. A lot of analysts will say price that does this breaks things. And once the chart is broken, you get something parabolic, then it needs to heal before you can do technical analysis on it again. Remember, technical analysis is nothing more than archaeology. You're looking at the past. You're looking at consistent examples of price action from the past to try to figure out what you're going to do going forward. So when you get something that goes crazy stupid like GameStop did during that whole meme crisis, that's where you can't use technical analysis because it's doing something, one, that it's never done before. And then two, it doesn't fit the norm of consistent market price action. So you can't use consistent market price action to discern what it's going to do next. This move this morning in the dollar is not that bad, but it's still not good. It's not healthy. If it moves too fast, we're going to be looking for mean reversion. So what we're looking at down here in this kind of a purple color is the ES. We can see when the Dixie ran to the upside here, for the first part of it, the ES fell. And then we had the ES rising at the same time that we still had the Dixie rising, at least until this last little leg. So it just kind of highlights that right now, it's not tit for tat. It's not a teeter-totter. The dollar moving up or down is not going to directly affect the price of the ES and the NASDAQ, not penny to penny. But we need to keep it underneath that 103.5. If we get above that, I think the market's going to respond. Likely it'll respond more in the NASDAQ than in the ES. So let's focus on getting back through the half back of this move that we've already had this morning. That'd be basically getting back below 103. Let's get back into that 102 area. And then slowly focus on the low of yesterday as an RTH, and then the low of yesterday from just the lowest point, which would be the ADR half, 102.5. So we did get some of the same movement out of the 10-year. We're not through the ADR half yet. We're still not inside day breakout yet. But we want to focus on this, see if we're going to continue to see that rising 10-year. Both of these were kind of selling off. So it just kind of highlights again that the tools that we use are a little broken right now. And we want to lean on swag levels more than just this is going up and this is going down. With that in mind, the 10-year breaking out above yesterday's price very likely is going to be a negative weight to the market. We're very likely going to feel that more than just being above its VWAP today. We did get extended a bit past the 10-week, so this could be a little bit of mean reversion too. Bond volatility is up. Bitcoin slightly, same with energy. And really that's it. The FANGs. All right, so we're getting a little bit out of Microsoft, not even back to the halfway point yet. It did have that really nice breakout, but it gave it all back. Now we want to focus on 50% of yesterday's move. In the lower left side of my screen here is the daily chart. We're at that halfback level right now. So we're watching this to see if we're going to get a halfback break or not. It's still not bearish, by the way. We've had a really nice run all the way from Halloween to where we are now. This is just a bit of a pullback, and the argument can certainly be made that we're slowing down in the move. We're seeing a lot more of, give and take, a two-sided market, actually red and green candles instead of just all green all the time. So certainly we're slowing down a bit. But when you take it out to the weekly, we get this really nice cup. No handle either. Just a fantastic expansion. And so far, that's still bullish. Same thing on the monthly. This is nothing more than just a little bit of a pullback. That's a really nice scoop pattern. So Microsoft is not bearish in the bigger picture. It's just a little bit of a pullback yesterday, along with everything else. Apple's another one that's up this morning, closed at 189, sitting at 190. So not up by very much. 189.37 to 190. Just a little bit. We're not even to the halfback level yet. We've got a lot of room here looking at Apple to get back to this peak, that 198. Plenty of room. It hasn't even completed the cup yet. So no significant resistance. This is some minor resistance, sure. All right, notice NVIDIA's got a filled green candle on the daily instead of a hollow candle. A hollow green candle shows that the open is lower than the close. And a filled green candle is the opposite of that. The close is lower than the open. The reason it's green, though, is because the close is higher than the previous day's close. We're negotiating with the halfback level right now. This thing has been in a range on the weekly for a while, between 500 and 400. That's the zone that we continue to negotiate with. The rejection from last week so far is holding. Still bullish. I wouldn't start getting bearish on this unless it breaks this low from 1122. That would be 477. Just kind of round up a little bit. If we can break that, then we can focus on getting back to 400. Right, one step at a time, but that would be just completing this cycle again. So break 477 for a chance to get to 452. I just don't see it yet. Meta's taken a little bit of a breather. I mean, you got to admit, that's just been a fantastic year. It closed off of the lows like everything else did yesterday. We're slightly up this morning. Closed at 332.20 and we're at 333.50-ish, 80. So we want to negotiate with that halfback, just like all the other FANG names that we looked like, just like everything else we looked at this morning. The China ADRs are up a little bit this morning. So Baidu, Baba, not so much. PDD. I didn't know that Temu, that app, it's like the Dollar Tree app, such really cheap stuff that you order. I didn't know Temu is from PDD. I was listening to Bloomberg yesterday when they were talking about how much money was spent by PDD for Super Bowl ads. Apparently, they set a whole new bar on how much money to spend, because the last time they spent money for Super Bowl ads, the amount of people that downloaded Temu afterwards it was a fantastic outcome for PDD. They loved it. So they re-upped, and it set a high enough bar for advertising that it's pretty much forcing the hand of everybody else to try to match that same level of commitment in advertising. So you really want to think about, who's going to benefit from those advertising dollars? What TV or media presence, right? Communications, Comcast? I don't know, right? That's kind of the question. But yeah, I didn't know that this was Temu. It is above the 50% mark this morning, so through the half back, and really it got there before the close yesterday. So we're going to be looking to expand on that. If the China ADRs are doing good, this would be definitely the horse worth following. JD, not so much. Same with Baba, right? Baba and JD not doing too good. There's companies that are like Amazon for other nations. This is a phrase that I heard quite a bit recently, like Alibaba is the China version of Amazon, right? It's okay. Costco's like the Amazon version for Canada. Okay, maybe. Okay, maybe. This would be the Amazon version for Argentina. This looks fantastic. I mean, that's just an awesome chart. No flows yet this morning, but it got me hunting around for, you know, something that is like Amazon like, quote, quote, in other countries, and then still have an American market symbol for us to trade, so that we're not trying to trade like, Amazon.mx, the Mexico version of Amazon, or the Canadian version, or, whatever. Online retail, basically, and then the highest online retail for that country. And Best Buy, Costco, Walmart, Amazon tends to show up, whether you're looking at Vietnam, China, Canada, Mexico, Argentina. But this name really stands out in Argentina. It's the top name, more than Amazon. And it shows. I mean, that's pretty fantastic. So USO's keeping that breakout. they had a nice recovery yesterday from that V-shaped move. And now we're keeping the inside day breakout, at least so far. This is a wicky, gappy product. So, trying to focus on gap closes or anything like that, I wouldn't really try to lean into that too much. But the range is really clear. And at least on this line chart here, that's kind of a really wide, really big head and shoulders. The thing is, the head and shoulders can't be the only thing you look at. I mean, it can't be the only reason you're getting into a trade. We do have this IX10, but it's a really wide IX10. And so instead, I would focus on the fact that these are constricting. They're getting narrower and narrower. And if we're using OCR style analysis, then we're getting higher lows and lower highs. And at least so far, a higher close. So this is a pretty solid reversal. If we're using OCR, the reversal is in. We still need the follow through, which would be a really good TRB setup, gets us back to 80.5, maybe even 83. So it can't be too expensive for the options in USO. I don't really like those January series yet, but whatever. We'll look at them. Okay, yeah. I mean, what, less than $50 for the 90s. I don't know if I'd go for 90. It's worth spending a little bit. 85 strike, and if you put the two together, it'll make a little bit of a call spread. Then you're looking at about 75 cents to be negotiated. I think you could work that order down because there is a bit of a spread here. I don't think I would go farther out than that. I mean, you do have, a $9 expected move when you add also this market maker move. So you can kind of get a little more out of it, but that's pushing it, right? We're already at 72.5. You're looking at 82.5. That's your $10. It wouldn't be so bad, but we got to get through all of these weekly moving averages, the 10 and the 20 sitting up there. And the 50% mark from this week is going to be just the area that we got to get and keep, right? You can see how we hit it and failed. We hit it back there and failed. We hit it here. So we're above it this morning. The thing is, can we keep it? It's like when the kids bring home one of the kitten out of the street. Can we keep it? No. Dead cat bounce. Too soon? So we got some levels to deal with anyways. The main thing right now is going to be staying outside of yesterday's price action. We made the breakout. We have to keep it now. If we can't keep it now, we're going to focus on working back through those levels. And like I said, they were talking about short crude at 80. And looking at USO is a bit of a proxy, but crude's almost 80. So All kinds of energy is up this morning. Nat gas, crude. Solar's not really up all that much. But we do got that trend line breakover of this really big level. So we'll see if we can keep it. Otherwise, we got some pretty good signals with IWM being up, that's small caps, 0.5%. And then technology, the FANGs up more than 0.5%. That's a great collection, right? We talk about that rising tide lifts all boats. Seeing these two up, even though the dollar made that really big move, kind of see a little bit of this shaking around here. Careful with the Russell. This resistance at 180 has been consistent. So still a lot of sellers up there. Until proven otherwise, we got to believe that they're still there. You can see the sell-off has been brutal. So it's getting defended along these lows, but it's still getting sold off across those highs. And until this changes, this needs to change for that Santa Claus rally. Let's say it that way. We gotta have these. It can't just be the FANGs. Same thing with technology. That 186 keeps getting sold off. We're making a little bit of a run at it again this morning. Inside day breakout, want to focus on 50%. So you can see the half back level. We're above it now. We need to keep it. Focus on getting back up into the high of yesterday and then that inside day breakout. Put it on a monthly. And you can see that we're still really bullish. This has been a great run, nice pullback. Now we've got that breakout. We need to keep it. Let's call it 181.5. I'm giving it a little, but that'll work. So this scan here that we're looking at, the right side is bearish, the left side is bullish. It's not hard to see which is which this morning, which one has more names in it. Metals and mining is still what we're seeing. Just be careful not to focus on X steel. I know it's easy to focus on that when we say, steel names, but this is an arbitrage play. So, Newmont is up at least this morning in the pre-market, or it's getting some flows this morning. energy, semiconductors, the Dow, technology, and small caps. China ADRs are lagging, but they're working on it. Silver, gold, precious metals, they're working on it, and Bitcoin starting to show up a little bit there. Where'd it go? Right there. So we're getting that rising tide this morning. It's looking pretty good. As long as they don't screw it up with the econ that we're going to get, we could get this recovery back through the 50% of yesterday, back to yesterday's high, and then focus on the breakout. Watch the clock, everybody. Be careful, be safe. I'll see y'all tomorrow.